Monday, January 8th, market analysis, Stan Ehrlich. Good morning, 9:43 California time. I start out with stock market indexes, and I'm doing that again this morning with the March futures contract E-mini. We are rallying pretty good this morning and making new highs for the last couple of days, Thursday and Friday last week, by a small amount. But if this rally holds and or makes new highs and continues a little bit, that could have been the low on Friday. It was in a very good area of support, the highest level of support that I expected some bounce out of, but not necessarily the low for this downside correction. I was kind of expecting more downside movement to probably around 46.50-ish. But we'll see. I don't have a resolution, so to speak, on my ideas as far as will this continue into new high ground or not as yet. So the next chart was going to be the spider, and the same story here, but it didn't even come down to the beginning of a support area, which actually should have dropped off a little bit more probably. And this is kind of a problem situation. I haven't got any real good reason to believe that the market is going to go in a new high ground yet. So I have to beg off for a moment and see what happens. Let's look at the 1 minute chart, and we just made new highs for the day, and of course above Friday's high and slightly above the high of Thursday. And that's as much, well, I can get a little more data on the screen. So here we come down, and I don't see anything here that really tickles my fancy about a new high for the whole trend, but it is possible. This is a bull market. I've said all along, and bull markets sometimes turn around and start to rally not at classical spots, which I look for. Next chart would be the Russell 2000. It closed a gap on the chart. It hit a support area. So this chart does look like it's in a spot where it could, in fact, rally more into new high ground totally. So that supports the idea that the spider and the E-mini and the other indexes might. Okay, so this is also an outside up day, a bullish engulfing. Now I'm not getting a green ER buy signal out of it because we weren't oversold. But today's low is just a little bit below Friday's low, and the high so far is a little bit above Friday's high and Thursday's high. So bullish type of activity this morning. A little bit of a surprise. The DIA made a minor lower low and hasn't even dropped below that bearish engulfing on the 20th of December. I thought at the time was the beginning of the break before the Santa Claus rally, which you now know didn't work this year. Unfortunately, all three Santa Claus rally trades lost money. Not too badly, about 10 points total, but ouch. Next, QQQ. Never made a lower low like some of the other indexes, and it is above the high of the last 3 days and has a small gap to close above the market. So we're going to see what happens when it closes that gap. It might turn back down again. Gaps are almost always closed. Let's go to the NASDAQ March futures contract, and it didn't make a lower low. It did come into a support area, and it's bouncing out of it very, very nicely. But there's no gap to close above the market. I suspect there's a little bit of resistance here at about 16,770, which is not very far away. But again, I'm a little bit off balance with these indexes at the moment, and we'll go to the futures markets right away. And the E-mini futures contract, but these are all perpetuals, has a minor new high. And if you've got questions or you want me to analyze something, you can send me the information at info@ersignals.com. And I'll do it probably within a day or two of your request. Now, same commentary as before, of course, on the E-mini and the I'm out of sequence here, so let me go manually to the next one, the NASDAQ. Okay, same commentary as before. We should be hitting bonds, and I'm not hitting bonds, unfortunately, ladies and gentlemen, so I will continue with the out of sequence. Corn got oversold today and dropped a little bit below a support line. Now, this is the first time for a while it's been oversold since late November, and it bottomed out with a bullish engulfing on that particular day and had a very nice rally for a week or so. Does not look like we're going to have a rally in corn at the moment, but watch out. It's about to turn back up again, probably. And wheat, we have a test of the low on Thursday of last week, and I think it's going to make new lows. It's been doing this for a long, long time, ever since the beginning of the war, which we had a bearish engulfing on the exact top day, amazingly enough, despite the fact that it was screaming higher at limit up bid all day long for days in advance. That reminds me of the Russian grain deal in 1972-73, which I lived through. Okay, new lows expected in wheat. Live cattle rallied up in a new high ground after a buy signal that we had, which is working nicely on December 15th. Our stop is now coming up to approximately where we are long, so there's not going to be any significant damage if we get stopped out. I am expecting further strength, probably up to the next resistance level, 174, then 177, and potentially higher. Hogs, oversold conditions for 3 days and pop. Rallied pretty good Friday and a little bit more today, but the trend is down in an intermediate time frame since the summer, and I think it's not going to go very far and then turn down to new lows. Cocoa, big drop today and got oversold in the process, but I think there's a little bit more downside elbow room, so I wouldn't be rushing in to be a buyer at quite yet, but the oversold condition does imply that it's getting ready to turn back up again. Next, coffee. We have a new low for the move down. We're not oversold, and I'm expecting to see lower levels. Next stopping point, 176 and below. And that would be the next stopping point, 165 probably on coffee. This started with an overbought condition. Next, sugar. Rally out of oversold conditions. This is a very, very profound oversold situation that lasted for weeks, which is fairly rare. You see it once in a while, but probably less than 5% of the time with oversold conditions do you have it last this long and have such a huge move down. Pretty rare. So I am expecting a pretty good rally out of this, at least up to 2213-ish and probably up to 2360. Next, cotton the rag. We have sideways movement. We're between a rock and a hard spot. The support area has been holding since early November and probably sideways to higher for the moment, but I am concerned that it could just fall apart, break this support area, and drop down. I wouldn't do anything with this at the moment. We have a failure to hold on orange juice, a break of a very long-term bear trend line that starts back on July of 22, a year and a half ago, and has several points on the line. This is a fairly rare, really long-term bull trend line. Now, we know we had a head and shoulder top. We have a bearish engulfing ER sell signal October 31st. Another one smack dab on the exact high of the whole move on November 21. The last shoulder high was on December 12th. And down we go, breaking the neckline and straight down in oversold condition. Only about a 2 and a fraction day rally to resistance. And here we are coming down again. Looks like breaking into new low ground slightly at the moment. And I do expect to see the minimum downside objective on the formation fulfilled at 288, as I've been saying for a few weeks. Next, bonds. Okay, rallying significantly, not really profound because it's a doji inside trading range day, but this obviously helps the stock market indexes a bit. But I can't get a good grasp on this either, so both interest rate futures and indexes are eluding me momentarily. And 10-year notes are going to be similar. Here we are. We're out of our long position that we bought on the bottom of the market on October 23. We had a fantastic trade, intermediate to longer term trade, which could have been used for scalping purposes. These signals can be used for short-term scalps or long-term trades. I'm showing you the long-term trades because the short-term scalps are a little bit more difficult to display and explain, etc. And it's just better to show you the longer-term signals. So, what now? And 10-year notes. Well, as you know, I'm long-term bullish like stock market indexes and think we're going to rally a lot over the next many months. This year, I expect bonds to challenge 118 and very possibly make a higher high. The Fed, and I don't mention fundamentals very often, said it would probably lower rates 2, maybe 3 times during the year, and it would be maybe later in the year. But markets move on anticipation and reverse on realization. That's one of my favorite sayings. I'll say it again. Markets move on anticipation, but reverse on realization. Next chart, crude oil, support, bear trend. I think I've already hit on this. And natural gas, almost a bearish engulfing. If we get one, I'll have a big red sell signal. And heating oil does have an outside down day, but it wasn't overbought. Therefore, no red sell signal, but the trend continues. And this wedge or pennant formation is still intact. Bumping against resistance, stopped it. And here we go. New lows for 3 days. Gold, we've talked about. You guys have a great day. Profitable trading to you. Mañana.